Okay, up next, Mrugank Paranjape, who's the MD and CEO of MCX, joins in with his perspective on the markets. Mrugank, it's great to have you on the show. Thanks very much for taking out the time. How are the sequential volumes, and give us color on the traction across key segments, particularly crude oil and gold?
I think we've seen a stellar quarter in terms of our results at 26,614 crores. This was the highest ADT we have seen after the imposition of CGT. In terms of the numbers, I think sequentially our volumes are up 8%, but in terms of profit we are now at 42 crores in terms of PAT as compared to what we had last year, which was about 18.7 crores, and for last quarter also, if you look at the revenue numbers, we are seeing an overall increase of more than 20% in terms of revenues. So I think it's been a stellar quarter. In terms of the sectors, it's mainly crude and followed by bullion, which have really done well. Crude, of course, has been outstanding last quarter, but I think we are also very positively encouraged by what we've seen in bullion, and that's because bullion has been a very important contract for us in the past. We lost some traction in between when the volumes came off, but I think we are seeing very good growth again coming back on the bullion space now.
Right. What's the realization trend quarter on quarter and trajectory of transactional revenue, along with the the kind of spends that you're seeing in terms of ads?
So I think the ADT trend has been positive this entire year. We've seen a growth continuously on a quarter-on-quarter basis. Last quarter we had more than 10% growth. This quarter we've seen more than 8% growth. So I think we are very confident that the ADT numbers are growing at a very healthy pace. I think of course what this has led to is that some of the larger members have grown faster than the rest of the market, which has meant that our realization has gone down. We started the year somewhere at about 2.22, but progressively we come to about 2.15. So in the last quarter realization went down by about 1.8%, and over the year, full year realization is down by about 2.5 to 3%.
What's the EBITDA margin range that you're aiming over the next 4 to 6 years? And the operating leverage is on your side, but analysts point out that higher software expenses and increase in CME royalty could put pressure on the margins going forward.
So I think if you look at our numbers, the EBITDA margin is now up to about 49% from 38% of last year. On a quarter-on-quarter basis, it's remained flat. So to last quarter where we were at 48%, we've grown to 49%. Now, if you see, we've grown this number by even that 1 percentage point, in spite of the fact that the CME number is higher. So therefore, there's no reason for the CME number to put any further pressure on this. But this quarter, as you would have seen the numbers, there have been some one-off expenses of about 4 crores. So if that you take off, then you can well guess that the EBITDA margin can even move further. So I think we've always looked at a 60% sort of aspirational number on EBITDA margins. I think that's a trajectory we see ourselves going towards in the next 4 to 6 quarters.
So how's the liquidity in options and the level of pickup which you're seeing in institutional participation?
So I think institutional participation is a different topic. It is not yet allowed in this segment. We only have AIF category 3 funds, which